APRs. I mean, as you mentioned at the top of the call, Jerome, I'm a non-exec director of Responsible Finance, which is the collective body of consumer lenders, CDFI lenders in the UK. We're actually the lowest provider, cost provider with an APR. Our opening loans are at 79.9. Now, I think APRs are oft misunderstood. They're great for explaining long-term mortgages, and I think people who ask us about our APR clearly are able to articulate what a good mortgage rate would be, what a good credit card rate would be, or a loan from their bank. The people that we are serving are credit impaired individuals. These are people who need £1,000 today. And typically those individuals, from what we can see in their open banking, have a credit impairment. In fact, 50% of people who have borrowed from us have had a county court judgment in the previous 6 years. County court judgments would automatically preclude an individual from accessing a mainstream credit product. It's fair to say that our use of open banking, every customer that comes to us consents to the use of open banking, and they all bank with a UK bank. And you'd like to say, well, why haven't they gone to their own bank to try and access credit? And the reason is they have a credit impairment. Now, the cost of our funding and the cost of our provisioning is the reason why our APR needs to currently be at that rate for our consumers.
If we just use very simple numbers, let's say we hit the maximum amount that we are looking to raise with this bond, £1 million. We take the £1 million and we lend that to our borrowers. We then have an asset on our balance sheet, which is £1 million worth of loan receivables. We can use that asset as collateral for our senior lenders. Now, senior lenders will give us £900,000 of additional funds for every £1 million worth of asset that we assign to them. So that's a 90% advance rate. We can take that £900,000 and lend it to our customers. That then generates £900,000 worth of further collateral, which we can then pledge again to our senior lender. This time we would get £810,000 worth of additional borrowings. So that's 90% of 900, and so on. You can see already that we've lent £2.7 million against an initial investment of £1 million. In addition, and in the meanwhile, we're receiving principal and interest receipts, which we're then recycling back into the loan book. So if you run the maths over a 5-year period, the combination of that 90% advance rate and the recycling of capital ensures that you build up this very significant amount of lending.
In each and every loan that's made, a consumer shares up to 2 years worth of open banking data with us. Within that data, you are seeing probably 4,000 to 6,000 transactions across an average 2-year period. And from that, we're able to look at the difference between an individual's disposable income and their fixed income. And we recognize that for someone to take on a further financial commitment, something's going to need to give in their spending pattern. I always describe our customers as people who spend to their limits and not beyond their limits. And it's fairly apparent within the disposable and fixed income ratios that we have that you can see if someone can take on a further commitment. Notwithstanding that, we made a decision at the early part of last year to build in a very comfortable buffer of disposable income, which is typically £250. So we won't lend to an individual unless they have a buffer of £250 worth of beyond disposable income. But yes, we have seen increases in rent, private rent, significantly. We've seen increases, obviously, in utilities, and we have seen the cost of living make that decision on affordability more difficult. And we're currently only accepting about 5% of individuals to take out a loan with salad. We obviously see through open banking the receipt of benefits for people that apply to us. And in the last 12 months, we've identified £36 million worth of additional benefits for our applicants. Um, it's now gone on to be widely adopted by all other CDFIs in the UK. UK banks are now using this process. I'm deeply concerned about the 95% of the population that we can't lend to. And I think one of the things that we're very keen on using open banking for is to go back and remind customers to make these claims. I think in the FX video, we've got one of our customers who talks about receiving £350 a month of disability living allowance for her son. I mean, those are huge and life-changing numbers for individuals. There are, I'm afraid, to get on my soapbox, £19 billion worth of unclaimed benefits in the UK. And I think there is a general view that people are unwilling to engage following their first claim, but their entitlement continues on. So I'm particularly proud that we've managed to help both applicants and our declined population as well. And that's a service that we provide. Credit scores are incredibly useful for prime customers, but they are not representative of the turmoil or indeed the willingness to pay that sit outside of what the industry call bad credit markers. So, for instance, I mentioned CCJs. You know, a CCJ should not be a damning mark on your credit file for 6 years, nor should a missed payment sit on your credit file for 6 years. And that yet those are some of the things that block individuals from accessing mainstream credit. The banks themselves recognize that a CCJ of small value paid off, settled within a 2-year period. Why should that be still registered on someone's credit file? It sounds possibly Dickensian in my mind that, you know, people can't make mistakes and then remediate themselves. So for me, I think open banking takes into consideration an individual's ability to repay, but also looks at the appropriateness of the loan. One of the things that we're looking at is the stability of our customers. I mentioned that our best customers are people who spend to their means and not beyond their means. Open banking unlocks that historical performance and behavior to the extent where you can make a lending decision. And we've proved in our model using Crouton, our sort of machine learning process, that you can lend to individuals and they will repay, and they do repay. 100% of this bond raise will be used for lending. It's not going into supporting the OpEx of the organization. It's not going into technological transformation or anything else. This is going to be immediately deployed on day one into our lending population. And again, we produce an annual report. There's the last one. There's some amazing statistics in there about the people we've helped and will continue to help, as well as the decline population. I think it's fair to say we're here to service the whole of that sector.